how to build credit from 0 inches the USA, you just moved to America, or you just turned 18, or you just realized that this country runs on a 3-digit number you've never thought about and right now, yours doesn't even exist. No credit history doesn't mean bad credit, it means invisible. And in the United States, invisible is almost worse. Because right now, without a credit score, you cannot rent most apartments, you cannot get a car loan at a normal rate, you cannot qualify for a rewards credit card. In about 25 states, a background check for a job can include your credit. And your car insurance in most states costs you 50 to 100% more than someone with great credit in the exact same zip code. This is the system. It rewards people who already have credit by giving them access to more credit, and it punishes people who are just starting. So today we're going to break the whole thing down exactly how it works, exactly what to do, and in what order, so you never have to deal with that invisible feeling again. Let's start with the number itself. Your FICO score runs from 300 to 850. Right now, the average American sits at 715. That's considered good. Anything above 670 gets you real options. Above 740, and lenders start competing for your business. Below 580, and you're in what they call the very poor range. High rates, rejections, limited access. As of 2026, roughly 45 million Americans have either no credit file at all or a file too thin to generate a score. That's not a small group. And the system knows it, which is why it's slowly starting to change, and we'll get to that. Your score is built on 5 things. Payment history is the biggest 35% of your score, whether you pay on time, every time. Credit utilization is next 30%. That's how much of your available credit you're actually using. Then length of credit history at 15%, credit mix at 10%, and new credit inquiries at 10%. That's it. 5 factors. Once you understand these 5, the whole game becomes predictable. Now here's the first thing most people do wrong. They walk into a bank, ask for a credit card, get rejected, feel embarrassed, and give up. That's the wrong door. There are specific doors built for people with 0 credit history, and most people don't know they exist. The first door is a secured credit card. A secured card works like this. You give the bank a deposit, usually $200 to $500. That deposit becomes your credit limit. You use the card for small purchases, you pay the full balance every month, and the bank reports that payment activity to the 3 major credit bureaus, Equifax, Experian, and TransUnion. That reporting is what builds your score. The key word there is full balance. You do not need to carry debt to build credit. That is one of the biggest myths in personal finance. You pay it in full. The credit bureau still sees that you had a balance and paid it on time. That's what counts. Keep your utilization below 30%. If your limit is $300, never let your balance go above $90 before the statement closes. Ideally, stay under 10% for the fastest score growth. After 6 months of doing this consistently, most people generate their first FICO score. After 12 months, you can be looking at a score in the 680 to 720 range, which is enough to qualify for unsecured cards, better loan rates, and most apartment applications. The second door is becoming an authorized user. If you have a parent, sibling, spouse, or close friend with a credit card that has a long, clean payment history and low utilization, ask them to add you as an authorized user. You don't even need to use the card. The entire history of that account gets added to your credit file immediately. This is one of the fastest legal credit-building moves that exists. One good account from someone else can give you years of positive history the day you're added. The catch is that if they miss payments or max out the card, it also affects you. So choose carefully. The third door is a credit builder loan. This one works backwards from what you'd expect. You take out the loan, but you don't get the money up front. The bank holds it in a locked account. You make monthly payments. At the end of the loan term, you get the money. The whole time, those payments are being reported to the credit bureaus, building your installment loan history, which is a separate category from credit card history. Credit unions are the best place to get these. They're low cost, low risk, and specifically designed for people in your exact situation. Here's where 2026 changes the game. The credit scoring models are evolving. Lenders can now use VantageScore 4 and are beginning to adopt FICO 10, both of which consider a wider range of financial behaviors. This means rent payments, utility payments, and in some cases, phone bills can now count toward your credit profile if you use the right reporting services. Tools like Immigrant Boost let you connect your bank account and get credit for on-time utility and streaming service payments for free. Rent reporting services send your monthly rent payment data to all 3 credit bureaus. For someone with no traditional credit history, these tools can be the difference between being invisible and having a real score within 90 days. And one more thing, buy now, pay later is now being included in credit reports by some providers. If you use those services, treat them exactly like a credit card. A missed BNPL payment can now show up on your report. Now let's talk about what destroys credit before it even gets started. Missing a single payment. Just one. It can stay on your credit report for up to 7 years. Set up autopay the day you open any credit account. Minimum payment if nothing else, but ideally full balance. The autopay is not optional. Applying for too many cards at once. Every application triggers a hard inquiry, which temporarily drops your score. Space applications at least 6 months apart, especially in the beginning. Closing your oldest account. Length of credit history is 15% of your score. Your oldest account is an asset. Keep it open, even if you don't use it. If there's an annual fee, call and ask them to waive it or downgrade it to a no-fee version. Maxing out your card even if you pay it in full. The credit bureaus see your balance at statement close, not at payment. If your statement closes on the 15th and you've used 90% of your limit, that's what gets reported, even if you pay it off on the 20th. The fix is to pay it down before the statement closes. Here's a timeline so you know exactly what to expect. Month 1, open a secured credit card or become an authorized user. Use Immigrant Boost. Sign up for a rent reporting service if you pay rent. Months 1 through 6, use the card for small, predictable purchases. Gas, groceries. 1 subscription. Pay the full balance before the statement closes. Do nothing else. Month 3 to 6, your first FICO score appears. It might be in the 580 to 640 range. That's normal. That's not where you're staying. Month 6 to 12, open a credit builder loan if you haven't. Keep paying everything on time. Keep utilization under 10%. Do not apply for anything else. Month 12, you could be sitting at 680 to 720. That's good credit. You can now qualify for an unsecured card, better rates, most apartments, and in many cases, a car loan at a reasonable interest rate. Month 24 with no mistakes, 740 is realistic. At 740, the system stops fighting you. Lenders want your business. Rates drop, options open up. One last thing that most videos skip. Check your credit report. Not your score, your report. You get 1 free from each bureau every week at annualcreditreport.com. Look for errors, accounts you don't recognize, wrong payment statuses, wrong personal information. These errors are more common than people think, and they can suppress your score for years if you don't catch them. If you find one, dispute it directly with the bureau. They have 30 days to investigate and correct it. This is not complicated. It is repetitive. It rewards patience and punishes impatience. Every single thing you need to do is boring, pay on time, keep balances low, don't open too many accounts, don't close old ones, check your report. The people who understand this game by 25 are renting what they want, financing what they need, and building toward things that stay out of reach for people who figure it out at 40. You know the game now. All that's left is playing it. That's the full breakdown. If this helped, you know what to do, and if you're already on the path, drop your current score in the comments. Let's see where everyone's starting from.